If you have a dashboard and you wake up to see one particular currency dominating your entire dashboard, it means something happened recently. That was the situation I fell into this morning when I woke up and noticed the New Zealand dollar appearing in 3 out of 4 of the currencies on my dashboard. So in this video, we'll be looking through the New Zealand dollar specifically and then coming back to check against these three currencies to understand what really happened to the New Zealand dollar in particular. As of yesterday, the record of the New Zealand dollar's weighted score was negative 0.14. And this morning we are at negative 0.3. You can see how the score has been fluctuating and going backwards all the way from August 3rd. So this month has been quite bearish for the New Zealand dollar. And let's see where it's coming from. The situation seems to be coming from the most recent data release, which is an inflation data released on August 13th. They had a good inflation score as at July 20th, but it seems like it went downhill from there. The specific news leading to this situation is the inflation expectation. They're having expectations that this quarter of the year would not be so good for them when it comes to inflation. Putting that alongside the employment data already being negative and the other data being negative, even though the economic growth is good, but this inflation score that we just received would not do so good for a while before this currency could maybe regain some strength. On the Australian dollar, New Zealand dollar, I had hopes to sell at this high right here. But with the current information, you need to be very careful. This market has much more buying potentials to go up to the zones of the 1.215 to 1.225 levels. To verify all of this, we need to look back at what the current leg is saying. Well, in the current leg, we are currently fading the extreme. So on the 4 hours, we should be trying to buy this market in reality. Now heading into the 4 hours, remember, we're trying to fade the extremes, and to fade the extreme, I need a break of structure to the downside and then a change of character for me to take it as a liquidity sweep. But currently on this chart, I do not have a liquidity sweep at all. Instead, what I have is a market that pulled back into an extreme and ran off with it. Being that the data already says it's negative, we have a small option and a small window. This seems to be the extreme of the most recent leg of the 4 hours, and with this extreme being available, this is the only location we expect price to kind of pull back to for us to buy and then break above this 1.212 highs. The only way we can do that is to go down into the 1 hour. On the 1 hour, being that we're chasing the last leg of the 4 hours move, we'll be waiting to see price capitulate slowly down into our expectation zones. And when price does the fall into that zone, if you can do it between the next 2 days without any new news event release to show strength in the New Zealand or loss of strength in the Australian dollar, it will be a very good buying opportunity for me to take to the upside. That is all for the Australian dollar against the New Zealand dollar. The next currency we have here is the euro against the New Zealand dollar. Mind you, it is only fundamentally bullish, and it's the same situation with the New Zealand dollar. However, the Australian dollar, New Zealand dollar is longed by the COT leverage traders. Unlike that one, this one is not longed or supported by their move. The current leg is all of this. Everything here is a current leg. Why is that so? Price has not broken above this high, nor has it broken below this low. Instead, it swept the low, and when we see a sweep like this, it means we are most likely going to see runs to the upside, which is what we are currently witnessing on this daily chart right here. With expectations of runs to the upside, we're going to go down to the 4 hours to see if that run is actually going to take place. Over here on the 4 hours, we have the scenario we're looking for. We have price move up, move down, and is about to break above the previous high. Well, we do have opportunities to come into this market. We can see a lower time frame sweep of liquidity and a change of character down here. Very small, very little. This is the break of structure to the downside, which is the sweep. Then we have the change of character, the pullback, and the push ahead, breaking above this high. So with that break above the high, we can see anything around here is a good zone to buy in this market. And we're buying to hope to move to the upside. That is my entire move for this Euro New Zealand dollar. However, unlike the Australian dollar against the New Zealand dollar, the market is not being motivated by the leverage fund. The last but not the least is the New Zealand dollar against the CAD, which is fundamentally bearish and no other supporting situation except the 4 hours regime. So over here on this 4 hours chart, we're actually expecting a good bearish move in the first place. Why were we expecting bearish move? Simple. Well, this was the high that was taken, and after this point, we expect to fade in the lower time frame to the downside, most probably to the extremes, so that we can buy and continue the daily trend. But the situation has already started, and what we have here is the last leg of movement, and we see price currently coming down to the last available zone before it may push up a little bit and create that sweep of liquidity and then push to the downside towards the extreme. That is my personal expectation. The 4 hours, what we see here is price did create our sweep, our change of character, but never gave us a good enough pullback to then continue its move. Instead, it gave us a small pullback and made its move in one fell sweep, which is good, a good situation. However, the fundamental says we should sell. And the situation here looks like it's looking like it wants to buy. That is a trap, and you should avoid it. Why is it a trap? Well, if you take a very good look at this entire market structure from here, what do we see is this looks more like an inducement. This is an inducement for people to buy into and hope the market will move, only for the market to either move their way and suddenly go against them, or the market could go just like this, push up a little bit, and then fall. So you need to be careful when you take a trade in the New Zealand dollar against the CAD. Buying this market right now is extremely risky. I would prefer to wait for the market to actually move upwards and then fall down to my extremes for me to buy to continue the trend. But I will only continue the trend on one condition: the fact that the fundamental data and the markets align in the same situation. That would be a good buying opportunity. So I hope you got to understand why the New Zealand dollar seems like it's crashing in most markets, and the information where it's coming from and how it's leading to what we see on the chart. Without further ado, I'd like to say thank you for watching. See you guys in the next one. We want to share this video with someone who you think will find this trading knowledge valuable to their trading career. Peace.